Hi, Lance Roberts here with 3 minutes on markets and money, talking a little bit about markets and coronavirus today. Markets sold off Friday, and of course, we retested support here at the 50-day moving average. The good news yesterday is we had a nice bounce off that 50-day moving average, but was unable to actually kind of hold it. We were up about 40 points earlier in the day, sold off, lost about 2/3 of that gain yesterday by the market's close. Again, the bounce was nice, but it was fairly weak in terms of context makeup and durability. And so, again, we didn't really see a lot of change yesterday in terms of the magnitude of the move or in the strength of the move. The point, though, of this is that last night China has dumped a tremendous amount of stimulus into their system to try to hold off the effects of this coronavirus. More deaths have shown up now. We're up to about 400 death count. Many new cases have opened up last night. The counts are nearing 20,000 cases. So again, the coronavirus is still spreading. It's still active. This has not been resolved yet. The impact to the global economy is not really known yet, but we are starting to see some effects of that becoming in as Apple's closing stores, Starbucks is closing stores. We're going to have an economic impact from the coronavirus over the course of the next few months. It's not something's going to show up all at once. So the risk here is that, again, there's a lot of stimulus being put in. There's a lot of hope here that the coronavirus, I'm reading lots of articles like, oh, it's not as bad as SARS was. It's really early right now. We are just getting into this. SARS lasted about 4 months. So this is going to take a little bit more time. It's really way too early to make an assumption that this is not as bad as SARS was at this early stage of the game. Again, it's still spreading. More cases even have showed up here in the U.S. So look for this rally here. The question will be is whether or not this rally today can hold. And the second thing is that we've got to be able to really kind of break this kind of a short-term downtrend we're building in the markets. A rally back to previous highs is not out of the question. As we've talked about here recently, the markets are very oversold on a short-term basis. The rally yesterday didn't do much to reverse that short-term oversold condition. But on longer-term positions of this, we're still very overbought. So we haven't resolved a lot of the longer term issues with the markets because we had such a strong advance in the last half of last year. And so we're starting to still real kind of work through some of that overbought condition. Haven't really done that yet on a longer term basis. But short term, again, not surprising to see this bounce. This is what we kind of wrote about in our newsletter this past weekend. So again, use this bounce here to think about kind of rebalancing risk. We trimmed back on a couple of positions yesterday. We're trying to rebalance portfolios here just a tad. Emerging markets, international, those are still under a lot of pressure here because of the impact of what the coronavirus might do to those markets and economies overseas. Energy, really one of the big drags here across the whole sector. And what's happening in the energy sector is also very economically important to the U.S. and particularly here to Houston. I mean, we're seeing more pickups and bankruptcies in oil companies. We've had 9 last month so far. So we're seeing those increases pick up. We're seeing a lot of drag there, of course. Oil is a very sensitive economically across the board. So don't really dismiss what's happening with energy. It's in a bad position right now, but that's also beginning to weigh on some of the economic outlook as well. That's 3 minutes on markets and money. Be sure to go by the website, get our latest blog post today, technically speaking, on the website now, along with our latest blog post and more. We'll see you next time.